Hey, Legacy Traders, it's Tim and Jesse. We are here for the Friday market recap, here to share with you guys the exact details of what happened inside of our portfolio, the good, the bad, and anything in between. We're going to share those details. So we're going to go over every trade, and then we'll end the video with some market recap and expectations for next week. So, Jesse, you're going to start this thing out. So go ahead, take it away, share your screen, and then I'll go after you're done.
Awesome. All right, everyone, here we go. Let's jump into it. Let me move this box. I know you guys don't see it, but I'm moving it right now. Okay, so my first trade that I'm going to cover is the XLF trade, and this was a diagonal trade. It was a loser. This was a bullish assumption trade. I ended up taking it off. I ended up taking a lot of positions off this week because I wanted to start from scratch. I had a lot of losing trades, and they were making me lose focus and on what I really was trying to accomplish in my portfolio, which was win, and these were the opposite of those, and so that's why these are all going off. So let's cover them. This is XLF diagonal. The expirations are different on this guy. One is a 63-day and a 28-day, and these are separated strikes. Basically, it's like a vertical credit spread or a long debit spread. Sorry, it's a long call debit spread, but with opposing, the long strike is in the further back month. Anyways, close it for a loser. Not a big deal there. What else I have? Let's do Apple.
Apple.
This was funny because this was a trade from Alan, who's one of the legacy traders. He actually was going bullish in Apple, and I wanted to go bearish assumptions. I put on this credit spread here. This one I actually took off for a small winner, basically a 32-cent winner. So yeah, $32 there. So I took that one off for a winner. Apple has basically just gone straight down, so that's why I put this one on, which was kind of a good call. Opposing this one was this was a paired trade with a QQQ. This is another broken wing butterfly, just like the Apple trade that I posted earlier. This one was basically the other end of that. This was a bullish assumption inside of QQQ that got totally slammed hard. QQQ, when I was trading it in October 2nd, was way up above this 180 mark. This was the 30 delta at the time. So this was, it was trading like 183, 182, 183. And then it went just down. Now QQQ is trading, what was it? Let's see. What's QQ? 173 now. Yeah. So, yeah, this was, I took it off as a loser.
It's a loser.
Loser.
Ugh.
IBM. This was a bearish assumption in IBM, but this went way too bearish. So this went like so far beyond what you would call a normal, a normal deviation of movement. Yeah, this is IBM is now 129. This was in it was 145, 146 when I put this thing on. So yeah, we're down a lot. I took this off for a loser. Next trade was EXAS. This was an interesting trade. This one was a put spread. I was bullish in it, and EXAS has just gone down. So took this off for a loser, small loser, not the end of the world, but scratched it, cleaned up my account pretty much. Shaq, let's do this guy. Shaq was a bull put spread, and that one was small loser. So took that one off.
Micro loser. That's a $5 loss per share or per contract.
Yeah.
No biggie. You can live to trade another day there.
Yeah, it was basically, I don't want to focus on this guy. It was just kind of like I was done. I was just like, I'm done with these positions. I hate them all.
We'll talk about that a little bit. So you took off this trade for a $3 win, but not because it was a $3 win, but because you're just like, hey, pump the brakes, get out of here.
Yeah. So I've done this a few times in my account, and Keaton, who's another legacy trader who follows me, and he knows this about me too. If I ever just get like steamed about a situation in my account, I will. I have no problem scratching something and just waiting a day and putting a trade on. So, or waiting just like overnight, refocus and center my brain to jump back into the market on, just knowing what I need to do.
Yeah.
So that's like, I know how to trade. I know what I'm supposed to be doing, but when the market doesn't accommodate any of your positions, I don't want to lose focus on what I know I'm supposed to be doing, which is just putting on high probability trades. And the market just said no. And so I said, okay, well, I'm scratching all of you. Let's wipe the slate clean and, let's carry on. So this one was a small winner.
Cool.
This one, it's just a small call. It was just kind of like, hey, let's, put on a call, see how it works. Juniper Networks did barely accommodated, but I'm out on that one. Netflix, hey, an actual trade that worked. Yeah, Netflix is awesome, dude. This was the Iron Condor that I put back end of September, 9/25.
Yeah.
This was great, dude. This one was a super 115, 130 point wide. Yeah, 115 point wide Iron Condor, dude. I was like, this thing is great. And Netflix has actually really suffered in this market, and it still didn't even come close to touching the short puts there on the 315 strike. So this one was great. This one was basically standard Iron Condor, collect 50% max profit, and done and done. So this one was an actual solid win. And I was like, yay. That was the one bright spot of the week when I took this off 2 days ago.
Cool.
And then today, Tim kind of mentioned it. I actually had good luck trading after taking some of the stuff off. So today I got into a long call inside of Walmart.
Yeah, for sure.
I was just looking at the chart on Walmart, and it looked primed early in the morning. I put this thing on like 7:14. Yeah, 7:14. So this one was
45 minutes into market open.
Yeah, but just barely into it, and I was just looking at Walmart. It had some good action, and I was like, all right, I'm gonna jump in. We'll see what happens. And then it went up. Walmart did what it was supposed to do. It was a great trade. Took it off for, what was that, 40?
It was 56% return on investment.
Yeah, 56. So that was a good trade. I didn't intend for it to be a day trade, but it turned out to be one. So I win-win. And then MU. This one was it's interesting because I rarely do long puts, and this is probably the first long put I've ever placed in an underlying in a long time, very long time. And so this guy was great because I saw Micron, just the chart looked super bearish, and I put one on. I was like, I think this thing's going down for real.
Hey, say a few words on why you don't normally enter into long puts.
My trading usually is it's usually skewed bullish. Most all my trades are either bullish or neutral because I like rooting for the underdog, and so when something gets beaten up, I actually like going long into it for a price reversal, and collect on that. But today it just had a trend. Micron has just had a bearish trend. I mean, I'll even pull up a chart on this bad boy. It's just bearish, dude.
Yeah.
I mean, this thing has not really done much but goes straight down. Higher high, lower highs, lower highs, lower highs. I mean, it's just gone straight down. So there's not much to say other than look at the trend lines. So I was like, let's do this. So let's put on this put and see what happens. And it fired off, and it was a nice, good 47% winner, I think.
Cool.
46, 47. And so that was my week. All in all, I'm down 300, but it's been a rough one for me. So
yeah, for sure. Cool. Well, bring it back over here, and I'll share my screen. Oh, there we go. Tastyworks. Where are you, Tastyworks? Yeah, this work. Share. Boom. Take it away. You can see that?
Got it. Yeah.
Cool. So this is my history tab, the last 7 days. I am down as well, 97 bucks. Or if you look at, you can just pause the screen and see all these green bought to opens positions, add them together. It equals like 1523, I want to say. So take 97, we'll call it 98 bucks and divide it by 1523. It is a 6% drawdown for the week. So that's not good. However, yesterday alone, I had a $422 drawdown. So obviously, yesterday I just gave back all my profits for the week. So I paid to play this week, so not cool. But I want to share with you guys Tastyworks, or Thinkorswim. There we go. We'll go to Thinkorswim. We'll go big. Can you see that?
Got it. Yeah.
Cool. So I just want to get into DG, which also shout out to Alan, Dollar General. This was a play on Alan that we entered into. Alan Young shared this with me. And when did I enter into DG? I entered in, I'm looking at the trade. I entered in October 16th, and I exited out an hour and a half later. So I entered in here, and on this big day, pulled in a crazy return on investment. Let's see, I paid $450 for it, and I got out at $568. So I paid $450. I made 111 bucks there.
Nice.
Or 26% return on investment in an hour. That was my big win. That was my big win for the week. Also, MDT. Oh, let's talk about MDT. MDT, I was up, and then essentially I gave back all my profits yesterday. Sucked tail. But it is what it is. I entered in, I believe, on this day, the open of this day on, again, the 16th. And let's see if that's right. I just want to give you guys, on 8/24, like 2 hours into markets open. And then it begins going against me. And on this day, I was down by like 20 bucks. And then this day, I was down by, I think, like 120 bucks. So I gave back all of my profits, basically exited where I entered, and paid 4 days worth of time for it. Boo. But it is what it is. And then let's look at Visa and Disney. Visa, I just got slammed on Thursday's down movement.
Me too.
Yeah, it sucked tail. The overall market looked something like this. Big drop down to the 200-day and then popping to this 20-day moving average with a long whip to the bottom side. So I said, boom. Stochastics was going up on both slow and full. RSI was ticking up. I was like, this looks great. And with the long whip to the bottom, I was expecting continuation. What happened? Bam! It slammed down. I get slammed in that on Visa. I lost money there. And then Disney. Disney was, oh, man. Oh, it's so hard to look at this chart. Because, look, I entered in on this day here, and then I get slammed. I exit, and then what happens? My profit my profit target was at the top of that channel, and guess what happened? And it did it. And so it is what it is. So I'm down 97 bucks for the week. Paid to play this week. I don't have any trades on. Let me see. I want to show you just one more time. I just want to keep it transparent in the Tastyworks platform. I don't have any trades on. This thing expired today. So it's going to, I put a credit against it. So I did recoup this. This was only a $23 loss, even though it looks like 426. There was another position that against it, whereas VMW, there's another position against it that I sold out for just 1 penny back, and I got to keep the majority of this. So it was a $23 loss, but it expires today. But so I literally have no positions on. Let me come back to Thinkorswim, and then we will do wrap this video up with a market analysis for the week. So what I'm loving about the market right now is it's setting on the 200-day simple moving average, which is right here, and it's going sideways. You see this Evening star right here, the long move up, spinning top doji, move down. And then today it tried to pop, it didn't. Stochastics is still bullish, RSI's pretty much flat. Next week, what's daunting is if it moves below this 200-day moving average, that would be concern for me to pump the brakes for overall transition to bear market. However, I don't think we're there yet, and I would see this thing moving up to possibly the low of the bottom side of that previous trend line that it was using before, which would be 288. What I like about this is if you look back in February, whenever this happened, look at what happened. So it drops down to pretty much close to the 200-day moving average. It throws, again, an evening star. Then it goes sideways all the way. It goes sideways until like June, and then it starts channeling up. So I wouldn't be surprised, honestly, if something like that happened this, in the next few weeks, is this thing just goes sideways, maybe into the end of the year or something like that. If it does move up, my expected price point is the top of this trend line. If it goes below the 200-day simple moving average, it's really uncharted territories. We could come down to maybe this previous low down here at 268, or to a previous low somewhere around 260 or 255. So that's what I got. What do you think about that, Jesse?
I think, yeah, I'm definitely looking at the moving averages for sure. If they breach that 200-day moving average, I think it's going to go down or sideways. If they pop, I think it's going to be a sideways trend as well. I don't think we're going to do a recovery back into like the highs. And if we did, it's going to take a long time, like end of December time. So that's just my personal, stance on where I think the market's going. But I think it's with all the indices. I don't think it's just exclusive to SPY. I think NASDAQ, IWM, or the Russell. I think all of them are sitting right on that 200-day moving average, and they all are just they've been taken down a notch. Yeah, look at that. IWM has even breached it. So
yeah. Which is concerning because this is one of the largest indices that there is, and it's in what looks like a bearish trend, man. It's just dropping. And so if anything, I'm more bearish for the outlook than I am bullish, which is hard for me to say, but it is what it is. So
yeah, about time to put on some long puts, dude.
Stop. Okay, guys, that's what we got for you. This is our Friday market recap. Tune in every Friday evening. We share with you exactly what we did in our portfolios with transparency, because we believe that if you can see and understand inside of community what's happening with transparency, you will have growth. And we are all about helping you build a legacy through trading. So till then, we'll see you in the next video. Let's build that legacy.